Be honest. When was the last time you ignored a letter from the government? You see the envelope, it has that eagle logo, your stomach drops. You tell yourself, I'll deal with it next week. But next week turns into next month, and next month turns into 3 years later. And now instead of a letter, you're staring at a bank account levy, or worse, a notice that they're taking your wages. I know that feeling, not because I'm a tax guru who reads IRS codes for fun, but because 3 years ago, I owed them $50,000. $50,000. And no, I wasn't some big corporation. I was just a freelancer who messed up my quarterly estimates and then panicked. I thought my life was over. I thought I was going to lose my car, my house, my dog. But here's the plot twist. Last month, that same debt, I settled it for $3,000. $3,000. The IRS accepted an offer in compromise for pennies on the dollar. And today, I'm going to show you exactly how I did it. Step by step, no fluff, no hire an expensive tax attorney nonsense, just the raw blueprint. This is going to be a long one, so let's lock in. My name is Thomas, and I spend way too much time thinking about settling my back taxes with the IRS and putting together the offer in compromise. If you're someone who feels like you're drowning in tax debt and you can't see a way out, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Now, when I tell people I settled $50K for $3K, the first thing they say is, Thomas, that's tax evasion, or you must have cheated the system. Look, I get it. We're conditioned to believe the IRS is a ruthless machine that always gets its pound of flesh. We think they are the mob with better suits. But here's the thing. The IRS actually has a program designed specifically for people like you and me who are broke and can't pay. It's called the Offer in Compromise, OIC. And the reason you don't hear about it because the IRS rejects about 60% of the applications. But they reject them because people apply for the wrong reasons. They apply because they want a deal. You only get the deal if you can prove you need a deal. Big difference. To understand how I got this deal, you have to understand how the IRS thinks. Most people think the IRS wants to punish you. They don't. They're a collection agency. They want the money, period. So they use a formula called Reasonable Collection Potential, RCP. Here's what most people don't realize. The IRS isn't asking how much do you owe. They're asking how much can we realistically squeeze out of this person before the 10-year statute of limitations runs out. It's a math equation. Your RCP equals your assets plus your monthly disposable income multiplied by the number of months left on the clock. If your RCP is lower than the total debt, they will accept a settlement for the RCP amount. For example, let's say you owe $50,000, but you have no house, a car worth $2,000, and after paying rent and food, you only have $100 left over at the end of the month. If the IRS has, say, 100 months left to collect from you, their calculation is $2,000 for the car plus $100 times 100 months equals $12,000. In the IRS's eyes, they're never going to get $50K from you. Realistically, they can maybe get $12K, so they'll often settle for that amount. Now, here's where I messed up the first time I tried this. I thought the number was $12K, but I actually got it down to $3K. How? Because I challenged their assumption of disposable income. This is where it gets really interesting. When I first did the math, the IRS said I had $500 a month in disposable income. I said, no, I don't. Step 1. The expense maximization. The IRS uses national standards. They say a single person only needs $400 a month for food, but if you live in New York or San Francisco, that's a joke. You're spending $800. You have to fight for those numbers. I went through 6 months of bank statements. I found everything. I found the $40 a month I spend on protein bars. I found the $120 for internet that I need to work. I found the actual cost of my health insurance, not the standard allowance. Most people fill out the IRS Form 433A, which is the financial statement, and they lowball themselves. They try to look poor, but you have to look accurately poor. I proved my disposable income wasn't $500, it was $150. Step 2. The doubt as to collectability argument. I didn't just send the form, I wrote a narrative. I told them my industry was unstable, which it was. I showed them that if they forced me into a payment plan of $500 a month, I would default. They'd have to levy me, I'd lose my job, and they'd get $0. I basically said, look, take the $3,000 check I have in my hand right now, or spend the next 10 years chasing me for nothing. Step 3. The lump sum offer. The IRS loves cash. They love certainty. I offered a lump sum cash offer. This means I paid 20% of the offer amount, $600, with the application and promised to pay the rest, $2,400, within 5 months of acceptance. I didn't have that money sitting around. I borrowed it from family. I sold some old camera gear. Why? Because the IRS is 40% more likely to accept a lump sum offer than a periodic payment offer. It shows good faith. Now, you might be thinking, Thomas, this sounds great, but I have a house. I have a 401k. I'm not broke like you were. You're right. If you have equity, this gets harder, but it's not impossible. If you own a house, the IRS assumes they can force you to sell it or take out a loan against it. That equity gets added to your RCP number. However, there's a second path called effective tax administration. This is the fancy legal term for it would be unfair to make me pay. If you can prove that even though you have assets, forcing you to pay the full amount would cause you economic hardship or be inequitable, you might still qualify. For example, maybe you have a house, but it's the only place your disabled child can live. Selling it would cause more harm to the community than the IRS would gain in tax revenue. It's a long shot, but it happens. Here's the stat that blew my mind. According to the IRS Taxpayer Advocate Service, in 2022, the average accepted offer in compromise was about 12% of the original debt. So my 6% deal was good, but not unheard of. People are doing this every day. Now, why do 60% of people get rejected? Because of 3 stupid mistakes. Mistake number 1, applying while non-compliant. If you haven't filed your taxes for 2023, 2022, and 2021, stop watching this video right now and go file. The IRS will throw your offer in the trash the second they see a missing return. You have to be current. Mistake number 2, the $12,000 check. I almost made this mistake. When I calculated my RCP at $12K, I almost sent a check for $12K. But remember, the offer is what you propose. You don't have to offer the full RCP. You offer what you can actually borrow or raise. I offered $3,000 because that's all the cash I had. They countered at $8,000. We met in the middle at $5,000 initially, but I appealed using the economic hardship clause and got it to $3,000. Negotiate. Mistake number 3, giving up. The process took me 11 months. 11 months of letters, faxes, and anxiety. Most people quit. They get a rejection letter and assume it's over. But a rejection is often just a request for more information. If you don't respond in 30 days, it's dead. If you respond with better proof, it's alive. Look, owing the IRS money feels like you're wearing a lead jacket. It weighs on you. It keeps you up at night. It makes you avoid your own mail. But I want you to understand something. The tax code is not a moral document. It's a financial document. The IRS doesn't care if you're a good person. They care about the math. And if you can do the math better than they can, you can win. You can get your life back. I'm not a CPA, I'm not a lawyer, I'm just a guy who was terrified of his mailbox and decided to fight back. If you're serious about this, the link in the description has the direct links to IRS Form 656, Offer and Compromise, and Form 433A, Collection Information Statement. Download them, read them, start gathering your bank statements today. And if this video helped you realize that the IRS isn't an invincible monster, do me a favor, hit that like button. Subscribe if you want to beat the system at their own game. My name is Thomas. Stop panicking, start planning.